Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 125 on August 1st, 2020. I'm your host, Eric. And in this week's show, we will cover the trades from last week on Workhorse Group, Bed Bath & Beyond, and American Airlines. And then we discuss three new trades on Intracellular Therapies, Carnival Cruise Lines, and Pinterest. Now, it's always great to hear from listeners. If you have any questions about the trades presented here, or even about your own positions, feel free to email me. You can reach me at eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a short video series to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit our YouTube channel for the Weekly Option. Now this week we saw mixed reactions in the equities markets. The Dow Jones Industrial Average lost 41 points, which is basically unchanged, closing the week at 26,428 points. The S&P 500 index gained 55 points, ending the week at 3,271 points. Now it's time for the topic of the week, and the topic this week is somewhat tied to last week's topic. We're going to discuss keeping a trade journal. Now, last week we spoke about the idea that traders should expect to lose at some point, right? It's part of this game. It's part of learning. I also mentioned that we tend to learn more from our losses than from our winners, but there's one huge caveat to that. You only learn from your losses when you're able to go back and analyze your trade idea process and your execution, right? So we learn from losses that are analyzed. The best thing about keeping a trade journal is that it allows you to go back and analyze all the details of your decision-making process. So what do I keep in a trading journal? Well, first off, I want to keep all of the trade details. So you want the date to be in there, the time, you want the stock price, the option strike, the expiration for that option, and the price. You basically want all of the details that will let you go back and look at a chart and assess the information given the time period that you made it. Like, you want to be able to recreate the scenario that you entered the trade in. So all of those details are important. Now, here's an extra piece I add. I have a small write-up to explain my thoughts on why I thought the trade would be a winner. And it's that thought process that will be the biggest indication. Like, it's the biggest thing that will show you a flawed trade process. So I don't skip this section, even though it gets a little annoying. Sometimes you just want to make the trade, or you don't really have time to go back and write through everything. It's like you see something you want to execute, but I really do try to make myself go back and write what I saw or why I thought this would be a winner, because that really helps. And then the next part is key. For each trade, whether it wins or loses, I give a post-trade analysis of what worked and what didn't. And a lot of guys only do this for the losses, but it's important to do this for the wins too. So having a trading journal, it's kind of like being able to watch videos after the game. It's like your post-game analysis of your performance. And so if you don't have a write-up of both the wins and the losses, like if you only write about the wins because you're happy, or you only write when you lose because you're sort of punishing yourself, then you're missing a portion of the information. You want to be able to analyze the wins and the losses so that you can replicate or fix what needs to be fixed. So if you want to be the best, you have to analyze your performance, and having a trading journal can be a really valuable part of that process. So that's it for the topic of the week. Let's go ahead and get into the trade review from this past week, and I'll apologize in advance. This show might actually be a little shorter because we're 3 for 3 this week. We won on each of the trades, And that tends to lead to a shorter show just because I have less that I need to explain in the review process. So we're going to start off with the covered call on Workhorse Group, symbol W as in whiskey, K as in kilo, H as in hotel, S as in Sierra. At the time the stock was trading for $15.14 per share. I looked at buying that stock and selling the August 15 half call at $1.90, hoping for a maximum return of 14.93% over 4 weeks. Well, this week, Workhorse Group stock gained 38 cents per share. The call that we sold also gained 35 cents in value. So our net gain on the week, if you were to close the trade on Monday, would be 3 cents. Now, we know that if this stock is at or higher than $15.50 at expiration, which is 3 weeks from now, then we will lock in a nearly 15% return on our investment. So since this trade is working, there really isn't any need for an adjustment. I wouldn't look to sell a call spread or sell a put spread. Like, don't do anything. When it's winning, let this one ride out, and hopefully in 3 weeks, we'll be locking in an almost 15% return. Our next trade from last week is a credit spread. We looked at Bed Bath & Beyond, symbol B as in Bravo, B as in Bravo, B as in Bravo, Y as in Yankee. At the time, the stock was trading for $10.14 per share. We looked at selling the August 10 9.5 put spread at 17 cents, which could give us a maximum possible loss of 33 cents per spread. Well, Bed Bath & Beyond stock gained 68 cents this week, closing at $10.82 per share on Friday. The out-of-the-money put spread we sold is even more out of the money now, and if you were to close the trade at current market prices, you would lose 5 cents per spread because of the bid-ask spread. However, we know that if this put spread finishes out of the money, and we're currently about 82 cents out of the money, then we'll get to keep the full 17 cents that we collected for selling the spread. Now, you can always consider selling an out-of-the-money call spread against this trade as well to enhance your return. For instance, you can sell the August 11 half 12 call spread at 14 cents. That would increase your total premium in this trade or for this period to 31 cents. However, it also creates a $1.50 wide profit range in the stock that, if it's breached, will lead to losses. So overall, I wouldn't advise it. When I have a winning trade, my goal is to just let it win, let it go. So I'm going to leave it alone. I only fix, hopefully, trading journals have taught me this, I only fix the broken trades, not the ones that are working. So once again, no adjustments are needed on this one. And then our final trade from last week is a debit spread. We looked at American Airlines stock, symbol A as in Alpha, A as in Alpha, L as in Lima. At the time, the stock was trading for $11.39 per share, and I looked at buying the August 12 11 half put spread for 33 cents, hoping for a maximum gain of 17 cents or 51.52% return in 4 weeks. Well, American Airlines stock fell 27 cents this week, closing at $11.12 per share. The in-the-money put spread we bought is now even more in the money. So if we were to exit this spread at the current prices, because of the posted bid-ask spread, we would actually lose 4 cents. Now, just like the previous trades, we know that this put spread will expire worth 50 cents if the stock remains where it is now or simply remains below $11.50 per share in 3 weeks. That will be a 51% return on our capital, which means that this trade is winning. So because the trade is working, once again, no adjustments, I'm going to leave it alone. So without further ado, let's go ahead and dive into the new trades for this week. And I'll just have a side note. Thank you guys so much for writing. I was able to get back to a few more people who wrote me a couple of weeks ago. You guys are keeping me on my toes with all the emails, so thank you so much, and please do continue to write. And I'm actually going to be adding a couple of your questions to the topics of the week here soon. So thanks again. Keep emailing me. Now let's get into the new trade. So we're going to start off with the covered call on intracellular therapies, symbol I as in India, T as in Tango, C as in Charlie, I as in India. The stock ended the week at $19.82 per share, and I'm looking at buying that stock and selling the August 20 call at $3.20, looking for a maximum return of 17.05% in 3 weeks. So you enter this trade by buying ITCI stock for $19.82 and selling the August 20 call at $3.20. This trade makes the most money if stock prices finish above $20 per share, and the break-even price is $16.62 per share. So the stock purchase in real terms would require $1,982, and you would collect $320 for selling the option. Now, just a little side note, I like this company. It's taken some heat recently because of its cash burn rate, but it has 3 years worth of cash right now. So I'm overall bullish this company, but given that the stock has trended lower recently, this is actually a little bit riskier trade than I normally look at for the covered calls. But so take a look at the stock and see if this is something that makes sense for your own portfolio. I still am always going to be lured in by that high call price, and I see that price relative to the stock, and I definitely want to sell it. And I'm hoping that it's going to be an indication that the market also believes that the stock price is going to rise higher. So if you look at a stock chart and you wonder, like, why is Eric looking at this trade right now? That's the reason why. So let's get into the credit spread for this week. We're looking at Carnival Cruise Lines, and this is definitely a company we've traded before. The stock ended the week at $13.88 per share. I'm looking at just selling the August 14.5 call spread at 17 cents, which should give us a maximum possible loss of 33 cents per spread. Now you enter this trade by selling the August 14 call at $1 and concurrently buying the August 14.5 call for 83 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices stay below $14 per share. The break-even price on this trade is $14.17 per share. And in real terms, you would receive $17 per spread that you sell and have $33 at risk. Our final trade on the week is a debit spread. We're looking at Pinterest, and this is a stock we've traded before as well. Symbol P as in Papa, I as in India, N as in November, S as in Sierra. Stock ended the week at $34.29 per share. I'm looking at buying the August 33-34 call spread for 59 cents, which can give us a maximum gain of 41 cents per spread, or 69.49, almost 69.5% return on our capital in 3 weeks. Now you enter this trade by buying the August 33 call for $3 and concurrently selling the August 34 call at $2.41. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices finish above $34 per share. The break-even price is $33.59 per share. And in real terms, you'll pay $59 to enter this spread, and your maximum gain is $41 per spread. So that's it for the trades for this week. Thank you guys so much for listening to the show. I hope you have a fantastic weekend, and as usual, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.